We've all seen the prices of gas, utilities, and all kinds of goods and services go up because of the conflict with Ukraine. But what will the world look like after all of this is said and done? And what do the economies of the world actually experience either during or post-war? Today, we're gonna be answering the big questions that everyone is asking. Will milk end up costing $1,000+ per gallon? Will we have to hunt for our own groceries? And will my favorite movie, Shrek 2, become the new currency of the world? These are all very important questions that we need to talk about, since nearly all of us use gas to fuel our cars, and most of our electricity actually comes from the same fossil fuels that is shipped to us from around the world. And the sanctions that we put on Russia is what made the conflict even more serious in terms of our economic prices here. Last time we had anywhere near this level of price per barrel of oil was in 2008 during the financial and housing market crash.
It's gotten so expensive that they should consider changing the name from crude oil to rude oil. Okay, that's stupid, sorry.
Once that happened back in 2008, disruptions in the food supply chain had started to weigh into our economy and other economies as well. And that led to massive amounts of food shortages around the world, more specifically in the countries that were the poorest. And that means the price of food had also gone up as well. Then of course we had the collapse, then oil dropped and prices fell, which led to people forgetting that the crisis even happened. At least some people did. Now, similarly as to 2008, 2009, food shortages are becoming a real thing again. And mostly because we put sanctions on Russia, and Russia just so happens to be a decent sized exporter of grain and agricultural products in many of the countries around the world. If we lock that down and we don't allow exports of that grain and agricultural products, well, that is bad news. Fortunately for us and the EU as a whole, we can actually displace a lot of that agriculture with the land that happens to be located in Europe. But that is a much easier problem to deal with than the gas and oil situation. And so when it comes to oil prices, how are we going to see that stabilize? Well, we're gonna have to start buying oil from other countries, and in order to negotiate better prices, it might just take a little bit of time. And if we're not able to negotiate, well, then we're either gonna have to open up sanctions or start doing our own drilling at home, which unfortunately in the United States will lead to a lot of fracking, which costs a lot of money and also will prevent us from growing our own crops here at home on the same land that we used for fracking, which is also a really bad idea long term. And yes, there are other alternatives such as clean energy, which we've already seen a huge transition to, at least in the car sector and maybe at least, at home use, but there still isn't enough of a push for clean alternatives. And unfortunately, because of its price, it's only really available for the upper middle or the rich classes. And if we were talking about the entire economy, switching from dirty energy production like oil and moving all that to clean and green energy, well, that will most likely take at least 100 years to do. I mean, this is such a big issue that even Elon Musk, the cleanest guy in town, said that we need to increase our oil production at home if we are going to try and avoid a national, if not worldly, crisis. When you hear those kind of things, it makes you kind of scratch your head and be like, whoa, what kind of trouble are we really in? But what I'm trying to really get at is that it is a really big issue that we need to address. But of course, there are other things that will be impacted by sanctions. Mostly, we're talking about the Russian people, but the problem with that is that there's a lot less of them than there are of people that are going to be affected by the sanctions overall. And the impact that these sanctions are going to have on people around the world might be quite drastically different than the ones that are going to happen to Russia and its citizens, especially when talking about the super ultra wealthy people that are in the oligarch status of the Russian ecosystem. More specifically, Putin. I mean, these sanctions are supposed to attack the one man that is in charge of Russia, and yet it's mostly hurting other people around the world that have nothing to do with Russia itself. And at the end of the day, the richest class, the people who are in power in Russia, more specifically Putin and his buddies, are gonna be mostly unaffected by the sanctions as a whole. Even if Russia's currency were to drop 10, 20, 30, 40, 50%, which it's actually done the opposite of that at this point, these oligarchs still have so many other assets that they would be completely fine even in a recessionary period. You know, a lot of oligarchs are probably sitting there and thinking to themselves, wow, it's gonna be really, really hard to survive on these billions and billions of dollars that I have laying around. So hard being an oligarch. So with all of this in mind, what are the likely outcomes for actual commodity prices going forward? When it comes to gold, for example, it's been kind of like a safe haven in terms of conflict and could be a good hedge against the dollar or any other currency in time of crisis. And it is in my belief that silver will also gain in price as well, since there's actually more silver that's being used up than being mined already, and that is due to the properties that silver has similarly to gold and is being used in many, many electronic applications, including solar homes, electric batteries, cell phones, all types of things that you can think of that are electronic. Silver is probably in those things. And the nice thing about silver is it's a lot cheaper to use silver than gold. And of course, companies are gonna use that until that's no longer true. So in my opinion, over the next 1, 2, 5, 10 years, silver could actually accrue in value relative to other precious metals or commodities as a whole. And there's a few other things that might benefit from all of this. Now, of course, our pockets will feel a little bit lighter, but military stocks will probably go up in value. Clean and dirty energy stocks will probably go up in value as well. And even the housing market might benefit from this as well. Obviously, stocks will probably have to flush out a little bit in order to price in war fears and inflationary fears and all of the other things that we have going on. But in the long term, stocks will probably trend up once they've actually taken a bit of a fall. And historically, in most cases, lending rates go down during times of conflict. This time has so far been a little bit different, but if lending rates do tend to go down and people have made money in, maybe oil stocks or security stocks, or maybe even betting against the market, once those people sell out of those investments, they might want to diversify into other assets, including things that are a little bit safer, like housing, maybe silver, maybe gold, maybe even beat down tech companies that have insanely good revenues. But the ideal strategies for investors is to buy things that can actually bring them income, and housing just happens to be one of those assets. Remember that if lending is cheap, they can get that cash out of the properties and invest it into other asset classes. And if you looked back to the 1979 crash, you also could see that silver and gold prices had skyrocketed for the time being. Oil was also trending up as the world was worrying about the conflict between China and Vietnam. Housing prices even skyrocketed in the United States, anywhere between 6 to 10%, depending on what area you were looking at. And all of that happened in just 6 months time. And if you were to look at townhouse prices, those skyrocketed by over 30% in most areas in just 1 year's time. I also sifted through a few research papers by people that were way smarter than me from Harvard and Stanford that compared many other conflicts to the war in Iraq. Because that was an oil-based war, this is something that might be very, very similar to that as well. And when comparing all of that data to how other economies perform or not perform during times of conflict, they found that 32 out of the 45 countries that they looked at, a higher probability of war somewhere in the world had an associated rate of around a 5% drop in the overall stock market, and in 14 out of the 45 countries that they looked at had a significant decrease in the stock market of over 5%, which we've already experienced here. But even though in the short term, the economies around the world get hurt by things like war, conflict, and other tragedies that happen around the world, well, the bright news from an economic perspective is that, well, for example, in World War II, from 1939 to 1945, the Dow Jones was actually up over 50% during those times, which means it was up more than 7% per year. And so during the 2 worst wars in human history, the US stock market actually performed around 115% in total gains. But here are some averages for you. During the Nazi Germany's entry into what was then the Czechoslovakian nation in 1939 and the attack on France in 1940, the S&P 500 fell by 20.5% and 25.8% respectively during the following 22 trading days. And just 1 year after those instances, the market was actually up. How much, you might ask? Well, 19% and 9.2%. Now, during Pearl Harbor, the S&P 500 dropped around 11% in a single day after the attack. 1 year after Germany had declared their war with the United States, just 1 year after, the S&P 500 was 15.3% higher 1 full calendar year later. Kind of crazy. And during the oil crisis in 1973, the S&P 500 fell by more than 17%. And this was followed by the slowest recovery in the economy since World War II. Now, with all of that in mind, how can we prepare for the turmoil that's about to happen, or is already happening, or maybe slightly coming to an end? How can we profit from all of these horrific things happening around the world? Well, right now, the trend is showing that money is flowing to gold mining, silver, Brazil in the iShares MSCI Brazil ETF or EWZ, as well as general metals mining ETFs, which are up about the same amount. In a military action scenario, I view it likely that German, Scandinavian, French, and overall European indexes will see drops of upwards of 5 to 8% in a very short time frame. That means that certain A-quality stocks will become incredibly attractive, seeing price points that could really deliver some of those 20 to 40% growth rates in as little as a year if things line up similar to historical trends. Military stocks like Lockheed Martin, which is LMT, Kratos stock, KTOS, Raytheon Technologies, RTX, and Palantir are all security plays that are already seeing inflows of cash. Now, that doesn't mean that their stocks are just gonna skyrocket all of a sudden, but when there's times of conflict and the US and the EU are involved, those are the stock picks that you'd want to be paying attention to in terms of security plays. Now, of course, dirty or clean energy could see a nice big swing since this is a war on big oil, and clean energy is a long-term hedge against oil. Here are some of the fastest growing petroleum and natural gas companies if you guys want to check them out. Another industry that will likely be hit tremendously will be the airline industry, since Russia's aviation authority announced it had closed its airspace to airlines from 36 countries, including the 27 members of the European Union and Canada. Why this matters is that flights originating in Europe or Asia that previously traveled over Russia will need to reroute, which can add hours of travel time that necessitates to more jet fuel, which not only adds to the cost of each flight for the airline, but also reduces the amount of cargo that can be carried on each aircraft due to weight considerations. Those costs will likely be passed on to the consumer. The products this situation could affect are wide-ranging. A prime example is cars and semiconductors. A lot of high-value car parts go by air. They're flying from Asia to North America and Europe over Russia. So now they'll have to go the polar route over Anchorage, and that'll add time and therefore cost. Some manufacturers could opt in some cases to transport items by sea instead. For products like perishable food or fresh cut flowers, there isn't an alternative available. Companies like American Airlines and Delta have already seen a steep decline in their stock price, which may become a great buying opportunity for those who wanted to buy airline companies and missed out on the massive drop during the pandemic. But obviously, all of this information should be taken with a big grain of salt, because just because things happen the way they did back in previous times in history doesn't mean that they're likely to happen the same way that they did back then now. So I hope you guys found this video very entertaining, educational, and I hope you enjoyed it. If you did, please make sure to smash the like button. It really helps out our channel. And if you haven't already, please subscribe if you want to see more awesome content like this. Thank you all so much for watching. I'll catch you guys in the next one. Peace out.